So in this video, we want to answer the question, why did Plug Power plunge 13% in February? Now, this is the monthly chart, and the chart is suggesting prices are at what we call an accumulation area. That's where the smart money believes that price is selling at a huge discount relative to where price was in the past, and that would be up at $76 established back in January of 2021. Now, price for the last 18 months has been showing signs of a reversal. Yes, prices have been making lower lows, but again, prices are at a distribution area where in the past that has been a sign for price to move higher. Now, before we look at the lower time frames, let's actually get into the news. So Plug Power confirmed last month that its new hydrogen plant in Louisiana was on track to start operations in the first quarter. Again, the stock fell another 13% in February after dropping by a similar percentage in the previous month. Now, Plug Power's earnings were around the corner, and investors clearly weren't taking a chance. They were right to be cautious, although the hydrogen fuel cell maker expects 4 to 16% revenue growth in the first quarter. It is also slashing cost and didn't say much more about this outlook for this year. Plug Power closed a $1.66 billion loan guarantee from the DOE earlier this year and expected to use the money to build up to 6 green hydrogen plants. However, President Trump's decision in January to freeze the previous government's funding for the clean energy industry has put Plug Power's loan in limbo. That's left Plug Power in a spot, forcing the company to look at for investors for its new projects and cost cutting to preserve cash. Plug Power expects to reduce its workforce, discretionary spending, and inventory, and cut down on capital spending. The company has also given its cost-cutting initiatives a fancy name, Project Quantum Leap, and expects to cut its annual expenses by $150 to $200 million. All right. So importantly, unlike in recent years, Plug Power has also refrained from providing any guidance for 2025. There's not much to look forward to anyway, given that Plug Power reported a negative gross margin of 122% and a massive impairment of $971 million in the fourth quarter due to strategic shift in its business operations stemming from push out of market demand and overall market dynamics. All right, so February was down 13%, January was down also similar. Again, the chart is suggesting price is in an accumulation area. If we just shift this roundabout to about here, that puts us at about 2026 for this roundabout to firmly take shape. Best level to get long is going to be down at this monthly buy level at 50 cents. We are about $1.28 away from that level. Scrolling out or scrolling down to the weekly chart. Now, when price was respecting this short-term uptrend, but when price broke through and closed below, that opened the door for prices to move lower, and price did such that. Taking it down to the daily chart, you can see price has found some bulls, although short term. If price is going to resume its upward trajectory, it needs to close above this local support resistance at $1.80. If it can do that, look for price to move higher and retest $2. But this key level is going to be roughly at $2.26. That's where the 200-day moving average in yellow will serve as dynamic resistance. Let me know what you think in the comments. Are you buying that Plug Power is forming a bottom, or is it still a risky trade? Let me know what your thoughts. Thanks for watching. Subscribe. Please like the video.